Is that okay with everybody? Right, one more request. Who's that? I think we're probably about ready to go. Perfect. Sorry. And Fringe Fry here as well. Jumping on. Okay. Is everybody ready? Right. So, just as a brief overview, for those who are new to the concept, could you explain, like in layman's terms, what fringe finance is and how it functions within the DeFi space?
Sure, yes. Well, I am Brian.
Oh,
I'm the CTO of Fringe Finance, and hopefully I can give an answer there that makes some sense. So, Fringe Finance essentially is a lending platform. Um, and that's the easiest way to conceptualize it with anyone, for anyone who has had some familiarity. And what that means is, and particularly, it is a decentralized, non custodial, uh, peer to pool lending platform. So let me break that down. Non custodial means that we don't hold any users' assets, they're all held in smart contracts, and only the user can access those funds. We can't access those funds in any respect. Um, Decentralized means that it's all on the blockchain, and and again, there's no bank accounts that hold any of the funds. And peer to pool means the funds are held in a pool provided by lenders, and lenders um, don't know who, in fact, individually borrows their assets. And then borrowers come along and borrow from that pool of assets. They stake some collateral and they over collateralize their lending position so that the borrowers are protected. So the lenders are protected so the borrowers cannot just run away with the money they borrow or the assets they borrow. Um, and that incentive compatibility model attracts both of those users to the platform. There's an interest rate that attracts the lenders, and that interest rate is paid by the borrowers. So that, in a nutshell, is the core aspect of the platform. But we do have leveraged trading facilities on the platform and a whole host of utility on top of that platform that attempts to quite firmly differentiate it from other actors in the DeFi space. So that's a quick bit of a quick intro, but I'll leave it there just for the moment.
fantastic, fantastic. Very, very good there to give us a good overall explanation. And as the questions go on, we'll go more and more in depth. So, like, could you provide like an overview of the fringe finance, then the ecosystem, and how do different components, like for example, fringe lending, F tokens, the USB stablecoin, Amplify, and margin trade platforms, like how do all of these very interesting different aspects of Fringe interrelate?
Yes, okay. So as I mentioned a few moments ago, we've got the lending aspect of the platform. Um, and the lending aspect is really driven by lenders lending out their assets and then borrowers coming along and borrowing their assets. The lenders themselves, just to refer to something that you mentioned there, which is F tokens as in fringe tokens, they are a token that is awarded to the lender whenever the lender lends assets to Fringe, so that they've got a token that allows them to redeem those assets in the future. But the redemption value of those F tokens increases over time. So that reflects the interest rate. So that means if a lender deposits, say, $100 onto the platform, $100 of USDC, let's say, they will receive a certain number of F tokens. And at that point in time, that number of F tokens could be redeemed for that 100 USDC. But over time, those F tokens can be redeemed for a greater number of USDC. So it's quite a simple mechanism, but it enables the lenders to achieve an interest rate, a yield on their deposits onto the platform. the way our margin trading works, which includes the amplify and the margin trade components of our platform, they are what's called a spot leveraged trading facility. So they're not synthetic instruments. And what we mean by that is a user can take out a leverage position, which is really very, very much like a borrower taking out a position. And the way that works is, if a borrower puts up some collateral, they can take out a leverage position, and that leverage position will comprise a pair of assets, being a short asset and a long asset. And the short asset, if you like, is very similar to the asset which is borrowed during a normal borrowing and lending position. So what we do, we abstract this notion of leverage trading out, and because of the loan to value ratios, and we can talk about that a little later, that we establish on the platform, which means how much you can borrow for any given collateral that you've placed onto the platform. It allows you to amplify or magnify, take out a leverage position against your collateral. And that means if you see a trading opportunity for a pair of assets, you can take a position in whichever direction or for whatever pair of assets we support on the platform. And so that makes for a very good trading opportunity. And all of the standard mechanisms for protecting the lender's assets are still in place there, even though it is a margin trading or a leverage trading facility. And what I'm referring to there is our liquidation mechanisms that protect the assets on the platform. So I'll leave that there, and if there are further questions, certainly dive into it.
Absolutely. Fascinating stuff indeed. And there's a lot in there. So I think I will personally have to, go over that once or twice. I'll put timestamps at the very end for everybody. So it's easy to get to the kernels of the questions and the points. But yeah, a lot in there, and definitely really interesting stuff. And we also have Carlos here with the Fringe Finance actual Twitter account. So if you've got anything to add or jump in at any time, Carlos, please do. So just moving on once again, how would you say does Fringe Finance distinguish itself from other DeFi platforms? I know we briefly touched on this here, but particularly in terms of low liquidity coins and cross-chain collateralizations.
Yes. Okay. So particularly the low liquidity tokens, or what we call the long tail assets, is a key differentiator between Fringe and other lending platforms. Many of the lending platforms that exist and that are popular in the marketplace at the moment support just a relatively small number of large cap assets. And so there are many holders of assets out there who really believe in the projects and the upside potential of the project, and have bought these long tail assets, but they can't do a lot with it because there's not a lot of utility available in the DeFi ecosystem to deploy those assets. Fringe Finance intends, or part of our philosophy is we are unlocking that capital for those users, for those billions of dollars worth of assets. We can now give these users who are waiting for the upside potential of their tokens to now deploy their tokens onto a DeFi platform so that they can enjoy some utility from their tokens rather than just letting them sit there. And what we mean by that is you can use those tokens as collateral to take out a loan. And then with that loan, you can go do other things in the DeFi ecosystem. You can take out a loan in, say, ETH and go stake ETH somewhere, if you like, on one of the ETH staking platforms. So that is one of the core differentiators that we have on the marketplace. But of course, that in and of itself doesn't create a good a feature-rich experience for users. So our intention here is to not only support those long-tail assets, but also to deliver all of the other facilities that we've delivered and we are currently in audit with at the moment, which includes a whole host of things, particularly around multiple lending assets, atomic repayments, so users can repay loans without having to have their capital assets or the borrowed assets on hand. We support multiple chains, at the moment 5, and that will just grow over time. We've got new and improved liquidation models that make it far more attractive for borrowers to take positions. And if there's untoward and unfortunate market movements against their collateral positions, then they don't get completely liquidated in a liquidation event. We just take small amounts to bring their positions back into balance. So there's a whole host of things there, including other things such as decentralized backends, LP token collateral support, and also NFT or fractionalized NFT for collateral support to take out loans against your NFTs, and also multi-sig wallet support, which is really important for institutional investors and also for DAOs who wish to deploy their treasury onto our platform. You know, I could keep going on here, but that gives a bit of an indication of some of the things that we are delivering at the moment.
Well, it seems like you're a super busy team. That there's a hell of a lot going on there, and I think we've seen over the past few months a lot more of the institutionals looking to get involved with. I know everyone was very hyped about the BlackRock ETF and so on and so forth. And do you feel that FringeFi has an eye on DAOs and institutional investors and how they're going to dip their toe into Web3, and you're going to have products and services around that? Do you think that's a key point?
It is. We have what's called composability with our platform. So all of the primitives, all the primitive functions for taking out a loan, depositing assets to enjoy yield on them and so forth, and taking leverage positions are all what's called composable. So the interface on our smart contracts to achieve this is all open, and various other platforms can use this, and we see this growing over time. So that is a core part of our strategy to ensure that the composability of that platform allows other higher level services to employ the Fringe Finance platform. It's all part of the ultimate growth strategy. I think directly to your question about institutional investors, Fringe will, over time, represent greater and greater appeal to institutional investors, because our TVL, our total value locked, will increase over time through our initial initiatives to attract retail users to our platform, and that will not only increase the attractiveness for institutional investors, but also some of our partners who we are looking for further integration with, where their platforms will integrate with the Fringe platform and expose it to further retail and institutional customers. So it is very much an iterative process.
Excellent, absolutely excellent. So maybe Carlos can jump in with the next question, or you can both maybe answer it in your own way. But can you elaborate how Fringe Finance manages risk? Because from my understanding, there's a large number of smaller, potentially more volatile altcoin assets as collateral, as we can see from the previous few cycles. Like a 95, 96% fall for altcoins, even up to 80, 99, 98 is not uncommon. So how would you guys manage the risk?
Yeah, that's a really good question. There's a couple of things we do there to manage risk. Of course, when we had our eye on the prize of developing a platform that would be able to capitalize upon that untapped market, we had to think long and hard about how to best protect all of the users, including the lenders, to ensure that they were happy to come to our platform. And we've got a number of ways that we do that. And one of them is our loan to value ratios reflect the nature and the volatility of the long tail assets that we list. So what that means is if there are more volatile, longer tail assets that we list, because they tend to have smaller market caps, they might have greater volatility, we can offer loan to value ratios that are commensurate with that volatility, which means it might be a little lower than some of the other larger cap assets that exist on the market, but it still gives the holders of those long tail assets really good utility to be able to still take out loans. Other things are we cap the deposit, the collateral deposits for the any given collateral asset, which means we're never going to really overwhelm the liquidities of any third party or external markets. And the reason for that is if there are untoward market movements for those collaterals, then there will potentially be liquidations on our platform that need to, in an orderly fashion, liquidate the borrower positions, which ultimately means selling some of those collateral assets on external markets. Now, if those external markets don't have sufficient liquidity, then it will be quite unorderly, the liquidation process on our platform, and it will potentially induce instability. So we limit the amount that we borrow or allow those altcoins to borrow against, so that we can always ensure stability and efficiency in those liquidation markets. That's some of it. Other aspects are we have our new price oracle mechanism, and that has a number of protections in it to protect against market manipulation events. And now market manipulation events where external markets are gamed by third parties, and then they use a platform to borrow at a cheap price. They use a lending platform that uses those oracles or those markets that they have gamed to borrow assets at a cheap price. Now, we are aware of the dumpster fires that have happened in the past in the DeFi space, and Fringe Finance has got a really good model that now addresses that, and particularly addresses some of the more high profile recent events, such as the Mango markets attack last year. And I think we've written a paper in our blog about that. And there are a number of other things that we use, which is our new liquidation model. And it's what's called a partial liquidation model. And I won't go into a lot of detail, except ultimately it minimizes the stress on external markets. And so that means liquidations can occur in a more orderly fashion. So these are some of the well-engineered, we think very unique and very differentiating aspects of our platform that make it a compelling place to come and do your DeFi. So that's a little bit about that. And I've only just scratched the surface here. We've got a lot of material on our blog, but and we can enter into any further conversation on any of the social media channels that we've got.
Yeah, so guys, if anybody's interested in delving even deeper, don't be afraid to get in touch with the guys at Fringe Finance, jump into their communities, ask the questions. I know they'd only be delighted to help you understand more about what they're building, because there is a lot there, and as DeFi evolves, there is going to have to be novel solutions and even more well thought out ways in how we're going to solve the many problems that are going to come, that we're going to face. So you mentioned about like a truly decentralized UI in Fringe Finance's vision. Could you like provide a few more details on this and maybe what advantages does it offer to users?
Yes. Okay. So the DeFi's value proposition is its censorship resistance. Otherwise, it's just TradFi. Um, if it can't resist coercion by state actors, then it's just the same. There's no reason to have DeFi. So DeFi exists for its censorship resistant properties ultimately. And the idea behind decentralized front ends and back ends is ultimately to increase the censorship resistance of the platform by decentralizing aspects of it. What we have done is we have decentralized our back end. And in the past, if anyone out there and listening is familiar with software development, quite often web apps will have the front end, but also a back end that the front end will connect to, and that back end will have a database and it will serve up certain information, and or it might have credentials associated with it to access third-party services to serve up and integrate with the information provided on the front end. Now, we've removed our back end completely and we have replaced it with a decentralized facility called the graph, and we use subgraphs on the graph. And the graph is a facility that takes on-chain data and puts it into a decentralized set of databases. So front ends can access queries or can execute queries against these decentralized database, which holds on-chain data or reflects on-chain data. So that means that heavy piece of engineering that to decentralize our backend, we've now undertaken, and it is part of the rollout for our version 2 of the product, which is currently in audit at the moment. And so that deals with our decentralized backend, and our decentralized front end is much simpler, and we'll be doing that as a second part of our V2 release, and that will essentially just allow third parties, and we'll incentivize those. So this is all quite an incentive compatible approach and an incentive compatible model that we're establishing for this, where those third parties will host the front end. And so any user can simply specify whichever front end they wish to have execute, and the code will be sourced from that decentralized front end repository. So that's a little bit about decentralization. There's a lot more about decentralization. We've written a post on this in our blog, and for people who are interested in that kind of stuff, we think it's really worthwhile having a little read. So there you go.
Brilliant, brilliant, brilliant. So you briefly mentioned there, like on the version 1, now you've got version 2, it's getting audited at the moment. What are some of the features and things that you've improved upon in version 2, and could you briefly go into that?
Okay, some of these I've mentioned, so at the risk of repeating, I will quickly run through. So some of the key additional features in V2 are multiple lender assets. So our V1 supported USDC as the sole capital asset. So you could post up all of your long tail collateral assets and take out loans, but those loans were all in USDC. Now we're opening that up so it can be almost any of our collateral assets that can also be used as lender assets. And that's good for a whole host of reasons, but we might get around to that in a couple of moments. We support multi-chain, so instead of just Ethereum, where we currently support, we support Optimism, Polygon, Arbitrum,
Yes.
and also
Wow,
ZK
that's
Sync
like,
will be all part of our V2 rollout. We support
really weird.
our
Only 318.
leverage trading facilities, which includes our margin trade and our amplify leverage trading facilities. We support our new liquidation model, which I touched on a few moments ago.
You have 3 characters on your old account. You get 1 fixed character.
And our decentralized backend, as I mentioned, our LP token support. So that means users who are providing LP tokens to AMMs, automated market makers, can now use those LP tokens as collateral to then deploy onto our platform to take out loans, to go do other things in the DeFi ecosystem, or even just use them as collateral to take leverage positions. So they can use it to hedge their bets, to minimize some of the impermanent loss that they may experience as an LP token provider for AMMs. We have other things such as wrapped token gateway. Now that we're supporting multiple lender assets, one of those assets is going to be ETH, and we just make it easy for users. We will wrap and unwrap the ETH to wrapped ETH as an automated part of the process of depositing and withdrawing those assets. Oh boy. And also our multi-sig wallet support. That's, as I mentioned, really important to allow institutions and DAOs to use our platform, because DAOs, for example, they typically have a trust minimized approach to the management of their treasuries, whereby no single individual is entrusted with the keys to the wallets of their DAOs, and they have multiple signatories. And now we support, through Wallet Connect protocol, multi-sig wallet support. So those DAOs can now deploy their treasuries and also take out loans against their long tail assets, their project tokens, to fund operational and capital funding for their projects. So it opens up so many new utilities and opportunities for Fringe that we're quite excited about it. And that really is very quickly what our V2 is. And there's a few other things with V3 that also are quite important. I'll quickly mention those. So one is pooled collateral. So that means a user, a borrower, can deposit a whole host of collateral of whatever assets they have, and they can borrow against that pool of collateral rather than borrowing against individual elements of their collateral. So it just gives them a more flexible manner to manage their assets and their borrowing, and to execute upon their financial strategies using our DeFi platform. Yeah, that's very quickly. I mean, you asked, I could go on for a lot longer, but there you go.
I'm just shocked. When does the team get a moment to like get a nap or have any sleep? Like, because it seems to have been go go go, even go out for a beer on a Friday night. And so maybe just tell us a little bit about the team you got, and like maybe a background on some of the team members.
Okay, so our team is spread across the world, and we, you know, it's really good. We have regular meetings, but then we will have chats after our meetings, and it'll be like Friday afternoon drinks. But of course, they're different time zones, and some people will be 8 in the morning for them. And we talk about our family and our kids and where we're going on holidays and that kind of thing. Some of us, in fact, have met in real life, which is great. And still there's some more of that going on. So the team is composed of an engineering side. So we've got development teams involved, and we've had a couple of different teams involved, and we bring them on in some instances for new developments. But we've got a steady team of about half a dozen devs. And they're primarily in Asia at the moment. We've got our protocol designers and the roadmap and strategy, which happens primarily in Australia. We've got our marketing director who is, well, he's from Central Europe and Eastern Europe, but now is living in Asia. I think he's enjoying the hammock lifestyle there. We've got our community team spread across Europe and South America. So there is quite a diverse team, and yeah, we all seem to get along well, and we're multidisciplined. Like some people are marketing, some people are technology, so it's a whole bunch of fun. But you know, some of the other guys can probably talk to that one as well.
So in decentralized by name in nature as well, like not just as a platform. Good to hear. Good to hear.
Yeah.
Okay. So like, let's go on to maybe the concept of the Fringe Finance DAO. Like, how will the government's transition to this model, and like, what implications will this have? I don't know if you want to take this, Fringe Fi or Carlos or whoever.
Yeah, I can take this one just to say hi. Hi, Brian. Hi, Ace.
Hey, Carlos.
So yeah, our rolling into a DAO model is one of the milestones that we're projecting for Fringe Finance and that we're looking forward to the most. The team is really cypherpunk in terms of the internal conversations that we have regarding decentralization and the importance that we attach to it. I think Brian also has spoken here about the importance of decentralized backends, UIs, and it never really stops when it comes to decentralization. And one of the most important things to do is to hand over the keys to the castle to the community. We are excited as a middle milestone there to first of all start distributing the platform fees towards our users and stakers of our token, and that is just like to activate the utility of the token first. Then what we want to do is to allow those token holders to also govern the protocol, and by that time there's probably also a financial incentive aligned with the idea of holding the token that makes it even more attractive for governance reasons.
Yes, there's probably a couple of things we can add to that too. There are various ways a DAO can be constructed and executed. And some of our experiences with DAOs is a fully decentralized DAO can be quite problematic in that its responsiveness decreases, where every single matter and question is sent for vote, and community engagement is low. And so there are a number of problems with that. And so there is emerging an improved, or at least depending on the organization, a DAO design that makes most sense for these kinds of projects. And a delegated model may very well be something that is adopted in this case. And what that is, it allows the community to vote in and vote out a core team that will execute according to the strategy. And so the community ultimately vote in and vote out the team according to their performance and adherence to the intent of the roadmaps. But day-to-day and small details are executed by the team voted in by the DAO. So that one could be a very useful model, and it reduces the overhead of herding cats and trying to get every single 3 token holder or holders that hold 4 or 5 tokens, governance tokens, being involved in voting. So that's just a little bit about that. And it'll be quite interesting to see how that shapes up once we get delivery of version 2 and version 3 out on the market. we can further focus on the DAO.
Sounds good. And I know we've had a few people joining, so just quickly, a quick overview. Fringe Finance is basically dedicated to unlocking capital and speculative crypto assets through a variety of products and services, lending, borrowing, leverage trading, staking, and other financial facilities. Holders who believe in the upside price of opportunity of their tokens can now put them to work instead of waiting for them idly for the price to appreciate. And that's just like a quick one from their documents of what Fringe Finance is for those who have just joined or who don't maybe know exactly what we're talking about here, because we're getting right into the weeds of what Fringe Finance is all about. And so on to the next question, like how does the Fringe stablecoin USB integrate into the broader DeFi economy? Are there particular benefits for the users who choose to mint or use it?
Yes. Okay. So the intent with a stablecoin is to provide a stablecoin that has broad utility in the marketplace. And we've got various ways to capitalize and incentivize the initial adoption of this token. But just the mechanics of the token is our version 1 of that is currently built on it's very similar to a DAI-like model. However, we do support, and which differentiates us, a broader range of the collateral assets, as mentioned, and that is really part of the philosophy and the purpose of being for Fringe. And then we will have a second version of our stablecoin, which will be Oracle minimized, because there is a set of emerging threats in the DeFi ecosystem that we want to ensure that we're one step ahead of, first of all, the competition, but more to the point, ahead of the threats that are emerging there, which is there is quite a series of threats represented by centralization in various aspects of DeFi, and particularly things like USDC stablecoins, which rely upon off-chain and custodial assets. And those are subject to coercion by authorities and confiscation. And so those kinds of things, we are designing solutions to avoid the problems or the problematic nature of those centralized aspects of DeFi. So that's really the intent behind our stablecoin, to provide a stablecoin that has utility broadly across the DeFi ecosystem, across multiple chains, and provides an additional set of platforms and utilities that collect fees for the use of this stablecoin that ultimately benefits the governance token holders and the project's treasury. So that's in a nutshell how it philosophically fits together, and what our intent from a engineering and from a decentralization perspective is aimed for.
Wow, brilliant. Fantastic stuff there. That's really interesting. So just maybe we can go to some of the questions that came up from the comments. There has been I think you probably might have stepped over them a little bit already, but like I want to give a shout out to Mehmet or at Band a link 11. What improvements does the improved interest rate models and Fringe Finance V2 bring in terms of maximizing lender funds being loaned out and balancing liquidity and yield for the lenders and providers?
That's a really good question. Okay, so one of the key things, or one of the differentiators we have, is our new interest rate model. And as you allude to there must be a good reason for introducing something new. And what we do there is introduce an interest rate model that targets a utilization rate rather than an interest rate. Now, what that means is if we're targeting a utilization rate, it means there is the maximum number of borrowers for any given lender assets. So ultimately, what that means is when lenders come to the market, if there are more and more lenders, then the interest rate will change to not target a given interest rate, but to target a utilization rate. And utilization rate means how much of the lender's deposits are being borrowed out by the borrowers. So how much of that lending pool is being utilized by borrowers. And ideally, we want that to be fairly high. We don't want it to be 100% because there's going to naturally be lenders who want to redeem their F tokens so that they can withdraw their capital and go do whatever else they wish to using that capital. So we want a fairly high utilization rate, around 85%, and that's the way we've configured things at the moment. And the DAO can reconfigure this over time if it's necessary. But what that means is all of that capital, or a great percentage of that capital, is going to be lent out to borrowers at an interest rate that is attractive to borrowers. So that is the design there, to ensure that as much of that capital is being lent out rather than only some of that capital being lent out. And therefore, lenders would be receiving smaller or a smaller proportion of the interest collected from the borrowers. So that's the intent there. We think this model is superior to the vast majority of lending platforms out there. And with greater adoption, we'll see this really come into its fore for the various markets now that we're enabling on our version 2 of the platform with our multi-capital asset support. So hopefully that gave a bit of an insight. We do have an entry in our blog that describes this also. So anyone who's interested in a bit more careful and more involved discussion or description of that, please feel free to have a look at our blog there.
Brilliant, brilliant. Absolutely. And as I said previously, I'm going to, after this Twitter space, I'm going to have the timestamps for everything so we can get to the questions as needed. And then I'm going to link in the blogs and everything that's been brought up as well. So we have it there for everybody to access as easily as possible. As we know with Web3, crypto, blockchain, whatever you want to call it, is like growing larger and larger in the public sphere. How does Fringe Finance address potential regulatory challenges and compliance requirements when mobilizing dormant capital in the DeFi space in the various jurisdictions around the world? Apologies for my pronunciation.
That's okay. That's a really interesting question. And I'll refer back to a point that I've raised before, that the only reason DeFi exists is because of its core value proposition, which is censorship resistance. So any DeFi that does not pursue censorship resistance isn't DeFi, and there's no point to it. So Fringe Finance very much upholds this notion of uncensorability, decentralization, censorship resistance. So we will continue to build our system to be increasingly decentralized and increasingly censorship resistant. So when it comes to regulation, well, in a decentralized, uncensorable ecosystem where Fringe is operating and will continue and further continue to operate, regulation doesn't exist in that space.
Brilliant. We have another question from one of our good friends, Menomex Art. I can never pronounce correctly, but I really recommend anyone to go check out his incredible art. He's a very strong contributor in the Altcoin Edge community as well. He has a question about, can you tell us a bit about possible offers regarding insurances? regarding insurance contracts in general, or having small cops as collateral surely requires high finance rates, which we've touched on before. Does Fringe Finance have a reinsurance partner, as the insurance market is almost completely untapped as far as we're aware?
That's a really good set of questions. There are a number of avenues where insurance can be offered in DeFi spaces. One, for example, contract insurance, where third parties can offer insurance to users of a DeFi platform in case there is a hack on a platform and a user loses funds. There are other ways insurance can be provided, and these variously have different names. For example, one might like to reduce the risk of volatility of variable interest rates, and therefore one might like to establish fixed interest rates for their borrowed positions and or lending positions, and those, even though it comes under the heading of fixed interest rates, essentially they're insurance-like, or option, it can be structured as options like an insurance-like products. So insurance can apply there as well, and we're looked at various ways that we can implement fixed interest, and we are in discussions with third-party contract insurers to allow users to choose to take out contract insurance if they wish against use on our platform. So there's a couple of things there. In addition to that, we do hold a reserve for to recover from any insolvent positions. So essentially, that again is it's an insurance. Well, it is insurance. It's a provision, in fact, that we hold as insurance for the platform. So that's insurance essentially for the lenders on the platform. So there's many different structures and or mechanisms that fall broadly under the heading of insurance, that we're ensuring that we best structure and offer the best options. Our view is users will choose. We don't want to force insurance on any user. For example, contract insurance. We don't hold a provision for contract insurance with another insurance provider. We allow individual user, if they choose to insure their position, they can go take third-party contract insurance. So we're, again, as I mentioned, in that discussion with insurance providers who would be able to provide that facility. And the way they do it is they verify our contracts and audit them and have a look at the history in our development team and assure themselves that they're well protected, and so that they can offer a insurance at a reasonable price to any users who wish to adopt it.
Fantastic. I think you covered that quite well there. I think we'll just do one or two more questions, and then I think we'll finish up. Pacman.bnb said, cross-chain collateralization is an intriguing feature in Fringe Finance's vision. Can you elaborate how that will work in practice? What challenges may arise from enabling cross-chain collateralization, and how does the platform plan to address them? I think we've touched on this briefly, but if you want to go into a bit more detail, that'd be fantastic.
Yeah, okay. So we've begun to look at that. We have held off from diving deeply into it because there is quite a bit of maturing being undertaken in the cross-chain collateralization space, and also we believe some more maturing that yet needs to be undertaken. So there are general ways that cross-chain collateralization can occur, but that would require the user to use third-party bridges outside of Fringe themselves, but then to bridge value across to a chain and use that as collateral on the Fringe Finance platform. Now, with regard to Fringe ourselves doing that, as I mentioned, we are just beginning we're yet to really undertake a deep dive into what we think we would like to do there, given there have been quite a number of, let's say, issues with cross-chain with bridges and some of the strange goings on that occur with bridges, and some of the risks that it currently still does represent for the DeFi ecosystem. So at this point, our answer to that very good question is we have not decided how we're going to proceed with that at the moment. We're looking at the continued evolution of that space. And when it makes sense, we will look at doing things such as allowing a loan to be taken out of one asset on one chain against an asset on another chain. And that's ultimately what we would like to do. But our view is the infrastructure for bridging those cross-chain collateralization, even though the infrastructure is there, we want it to be a bit more mature and a bit more secure.
Fair enough. So essentially, it's like watch the space. We're thinking about it, but it needs to come along a little bit further before we really start cracking the nut of the problem or the kernel of the problem. And like, in what ways? This is a bit more of a personal question as well. But I think it's important for people listening to get an understanding of like who is behind the project and what they're about. Like, so I'm gonna maybe finish off with one or two like this. Like, in what ways has working with Fringe Finance and the DeFi sector more broadly changed your perspective on traditional finance?
I think it's underscored my views on traditional finance, which, I think may be relatively evident from some of the points that I've made here. There's two ways the world will be going. One will be the traditional finance route, which is the inevitable direction there is central bank digital currencies, digital identity, surveillance, increased censorship, and not only in the financial transactions that you undertake, but how one can live their lives. And that's not really the headspace that I really support. So the other avenue will be, there will be the sovereign individuals, there will be the people who believe in a degree of libertarianism, a degree of freedom, personal freedoms, and these financial ecosystems that we establish in the decentralized and uncensorable financial DeFi space will be a wholly separate ecosystem. And so we'll see this play out or continue to play out over the coming years. And I'm quite excited about it because here is a frontier, a real an opportunity where things are moving quite fast. And there's, there really is a war going on that the traditional finance space is doing everything it can to be the master and commander of the entire universe. And there may be very many people who support that, but there are many who don't. And it's up to us to continue to build systems to support this alternative ecosystem that allows people to retain their freedom, that allows people to communicate and to deal with one another in whichever way they choose, rather than that having been dictated by a third party. So, there's many hours I could talk around that, but I hope that gives you a bit of insight into the question that you asked.
Absolutely. I believe, just briefly, that like we're kind of in a digital feudalism, so to speak, and like the peasants in Russia in whatever 18th century or 17th century, all the wealth went up to the landlord. We're in a kind of a digital feudalism where all the content that we generate, all the wealth that we have just gets punted up into the big tech. So I think that's also, we're on a very similar wavelength there. Ian, I don't know, would you like to ask a question? I've given you the opportunity to speak there. I don't know. I think I'll ask the question. He's written it here for me anyway. How I'd like to know if they feel LSDs may pose risks to the DeFi ecosystem. What are your thoughts on that?
Yes. In general, any blockchain that has staking associated with it as part of its consensus mechanism, there problematic aspects to that. I mean, it doesn't mean that non-staking consensus mechanisms don't have their own problems, but there are there are problems. On Ethereum, for example, it just happens to be that about 60 or 70% of the staking for these staking pools find their way to fairly proximately located servers to facilitate the fast trading that occurs between those servers. And it just so happens that that is in an area of Washington in the US, which is about 12 kilometers away from the CIA buildings. So the CIA headquarters. So make of that what you will. But the point is, it does pose problems. And the natural extension of that is that it's problematic. I think that just generally addresses that question that you raised.
Thank you very much. And have you got, I think we're going to wrap up now, but have you got anything else you'd like to point out to or bring up, or anything you're excited about personally, or Fringe or anything like that?
Yeah, I think after we get version 2 and version 3 released, like you say, having a bit of a sleep in one morning would be great. But we're really keen on what we're delivering here. We think it's on a winning formula. Certainly the engineering and the utility that we're looking to deliver is, we're doing it necessarily for the project and all of the users and token holders and anyone wishing to buy the token, of course. But ultimately, it is driven by a great passion, which is to best facilitate this alternative ecosystem of people being able to operate their financial lives without coercion and without permission and without confiscation and without censorship. So yeah, we're really keen about this sort of stuff.
Fantastic. And so are we. That's why we try our best to get on high quality projects that have a real ethos and meaning and a lot of thought behind them, on our socials, on our Twitter Spaces, and anything like that. So that's what we're all about. Eric, do you have anything to say?
Yeah, hey guys, it's Eric from the Fringe team here. I just want to say thanks very much, Zach, for having us on. It was a great talk. Thanks, Brian, for taking time out of your busy schedule. And yeah, basically, I think Brian covered everything, but there's a lot more to cover as well. So if you ever are interested in Fringe, feel free to join our Telegram. You can just check our website for the link. And yeah, we're looking forward to our V2 launch now on ZK Sync, Arbitrum, Optimism, and Polygon. So exciting times ahead. And thanks so much, Zach and Ian, for having us on. It was a pleasure.
Yeah, thank you guys. We really appreciate it. And everyone listening here today, that's thanks for coming along. Hopefully we've said a couple of things that make a lot of sense. Yeah, it's a really exciting space. There's a lot more to come.
Yeah, thank you very much. And for those who are wondering about the winners for the Fringe tokens, if you can join our Telegram first and then join across the Fringe Finance Telegram with the hashtag Altcoin Edge, we will be picking the winners there, and then we will also we'll be announcing it there as well. So please just do that. And again, I'd like to say thank you very much for everybody at Fringe Finance. I will put the timestamps up in the next 20 minutes of the spaces going off, because obviously there was there was a lot in that, and there's a lot to learn there. And I wish everybody listening in the best success in the future, and I hope you have a lovely Thursday. Thank you very much, everybody.